So, what's going on with the UK buy-to-let market as we look ahead to 2025? After a few years of, let's just say, interesting times with interest rate hikes and economic uncertainty, the dust is finally beginning to settle. The outlook for 2025 is surprisingly optimistic. But here's the catch. Not all regions are created equal. The traditional London-centric investment strategy is being completely flipped on its head. Instead, all the data, all the forecasts, and all the smart money are pointing in one direction, north. We're seeing a massive shift where northern regions and Scotland are set to completely dominate the market. These areas are becoming absolute powerhouses for property investors, and for good reason. We're talking about regions that are projected to lead the entire country in both house price growth and, more importantly for us landlords, rental yields. This isn't just a small trend, it's a fundamental change in the UK property landscape. While southern markets are expected to see more modest, slower growth, the north is gearing up for a potential boom. This is driven by huge regeneration projects, growing job markets, and property prices that are, frankly, much more realistic and offer a significantly better entry point for investors. That's why in this video, we're going to break down exactly where you should be looking to put your money in 2025. I've gone through the reports, analysed the data, and identified the top 6 regions for buy-to-let investment that offer the best combination of capital appreciation and strong, consistent rental income. We'll cover everything from projected price growth and rental yields to the specific local factors driving demand in each city. So if you're serious about making a smart property investment next year, you're going to want to stick around for this and make sure to smash the like button for the YouTube algorithm. Let's get into it. Alright, let's kick things off with an absolute titan of the North, Manchester. Honestly, if you've been following the UK property market at all, this won't be a surprise. Manchester has been on an incredible growth trajectory for years, and it shows no signs of slowing down. The forecasts are just staggering. We're looking at a projected price growth of nearly 29% by 2029. Let me just repeat that. 29%. That level of capital appreciation is almost unheard of in the current climate, making it a top contender for anyone looking for long-term growth. It's a city that has successfully reinvented itself into a major European hub. But it's not just about the house prices. For a buy-to-let investor, cash flow is king, and Manchester delivers on that front as well. Gross rental yields are hovering around a very healthy 6.3%. This strong rental performance is fueled by relentless demand from a diverse and growing population. The city has become a major magnet for the tech and finance industries, attracting a constant stream of high-earning young professionals who need quality places to live. On top of that, you have a massive student population from its world-class universities, which provides a steady, reliable tenant base year after year. It's the perfect storm for a landlord. Now, if you're looking to maximize those returns, you need to be strategic about where in Manchester you invest. The entire city is doing well, but some pockets are just on another level. Areas like Ancoats, which has transformed from an industrial heartland into one of the UK's trendiest neighbourhoods, are seeing incredible demand. Then you have Salford Quays, home to Media City UK, the BBC and ITV. This area is a hotspot for media professionals and offers fantastic rental opportunities with stunning waterfront views. Focusing on these high-demand zones is the key to unlocking the best possible returns in an already booming market. Next up, we have a city that I think is still seriously underrated, and that's Leeds. While Manchester often grabs the headlines, Leeds has been quietly transforming into an economic and cultural powerhouse in its own right. The numbers here are just as impressive. Forecasters are predicting a 28% price growth by 2029, putting it right on par with its neighbour. This signals a huge amount of confidence in the city's future and its ability to deliver substantial capital gains for investors who get in now. It has the largest economy in the Yorkshire and Humber region and is a major centre for financial and business services outside of London. When we look at the rental side of things, Leeds offers a very attractive proposition with average yields of around 5.4%. The demand driving these yields comes from 2 main sources. First, you have a rapidly growing population of professionals. Big companies are increasingly setting up major offices here, drawn by the talent pool and lower operational costs compared to the capital. This influx of professionals creates strong, stable demand for high-quality rental properties. Second, like Manchester, Leeds has a massive student population, with several major universities ensuring that there's a constant, recession-proof demand for housing, particularly for HMOs and city centre flats. One of the most exciting things happening in Leeds right now is the South Bank Regeneration Project. This is one of the largest city centre regeneration initiatives in Europe, and it's set to completely transform the area, creating thousands of new homes, jobs, and leisure facilities. Investing in or around this regeneration zone could be a very smart, long-term play. The project is a clear indicator of the city's ambition and will only add to its appeal for both residents and businesses. For investors, this combination of strong fundamentals and massive future development makes Leeds a city you simply cannot afford to ignore in 2025. Moving down to the Midlands, we have to talk about Birmingham. This city has undergone one of the most remarkable transformations in the UK over the last decade. It has shaken off its old industrial image and is now a vibrant modern city with a diverse and resilient economy. The investment potential here is huge, with price growth projected to hit 26% over the next 5 years. This is a testament to the city's sustained growth and the massive public and private investment that has been pouring in. Birmingham is the youngest major city in Europe, with a dynamic, growing population that is fueling demand across the board. What makes Birmingham particularly compelling for buy-to-let investors is the combination of that growth potential with very strong rental yields, which can range from 5.3% to as high as 6.6% in some postcodes. This is significantly higher than what you'd find in most of the southeast. The city's economy is incredibly diverse, with major sectors including manufacturing, finance, tech, and a huge conference and events industry. This economic diversity means it's not overly reliant on one single industry, making it more resilient to economic shocks and providing a wide range of tenants looking for homes. You can't talk about Birmingham without mentioning the massive regeneration projects and the impact of HS2. Projects like Paradise and Smithfield are completely reshaping the city centre, creating new commercial districts, public spaces, and residential areas. And while HS2 has had its controversies, the improved connectivity it will bring to London and the North is set to be a game changer for Birmingham's economy and property market. It will make the city an even more attractive place for businesses and commuters, further supercharging rental demand and property values for years to come. Investing here is a bet on a city that is very much on the up. Chapter 4. Edinburgh, the Scottish capital of consistency. Now, let's head north of the border to Scotland's capital, Edinburgh. This city is a different beast compared to the northern English cities we've discussed. While you might not see the same explosive, headline-grabbing price growth forecasts, what Edinburgh offers is stability, prestige, and incredibly consistent returns. The market here is famously resilient, often weathering economic downturns better than anywhere else in the UK. The price growth is steady and reliable, and when combined with strong rental demand, it creates a very secure investment environment. It's a blue-chip choice in the property world. The rental yields in Edinburgh are very appealing, averaging around 5.9%. What's really driving this is a classic case of supply and demand. The demand is immense. You have a huge student population attending the prestigious University of Edinburgh, a thriving financial sector that's second only to London in the UK, and a rapidly growing tech scene often referred to as Silicon Glen. All these people need somewhere to live. However, the supply of new housing is heavily restricted by the city's historic nature, its UNESCO World Heritage status, and strict planning regulations. This imbalance keeps rental demand sky high and void periods incredibly low for landlords. Because of these strict planning laws, new developments are relatively rare, which means that when they do come to market, they are snapped up quickly. Investing in new builds on the outskirts or in newly regenerated areas like Leith can be a great strategy. Leith, in particular, has transformed into a vibrant, trendy area with a fantastic food scene and great transport links, making it hugely popular with young professionals. For an investor looking for a safe, reliable, long-term hold with solid yields and consistent capital growth, Edinburgh is, without a doubt, one of the best options in the entire UK. Chapter 5. Newcastle, the gem of the northeast. Let's journey back to England and head to the northeast, to a city that offers some of the most attractive yields you'll find anywhere. Newcastle upon Tyne. This city is a fantastic example of a market that provides both affordability and high returns. While it might not have the same price growth projections as Manchester or Leeds, its entry point is significantly lower, making it much more accessible for investors who are just starting out or looking to expand their portfolio without breaking the bank. The focus here is really on the cash flow, and Newcastle delivers in spades. The rental yields in Newcastle are exceptional, averaging a very strong 6.1%. This is powered by a potent mix of tenants. The city is home to two major universities, Newcastle University and Northumbria University, which means there's a colossal and ever-present student rental market. Beyond the students, Newcastle has a burgeoning tech scene, particularly in fields like gaming and software development, which is attracting a new wave of young professionals. This diversification of the tenant base is crucial for the long-term health of the rental market, moving it beyond just student lets. What's really exciting about Newcastle right now is the sheer amount of investment and regeneration happening. You have landmark projects like Newcastle Helix, a 24-acre site dedicated to science and technology, which is creating thousands of high-quality jobs. Then there are major residential developments like Hadrian's Tower, the city's tallest building, which are changing the skyline and providing the kind of modern apartments that young professionals demand. This ongoing transformation, coupled with the city's affordability and high yields, makes Newcastle a dark horse and a potentially very lucrative spot for buy-to-let investment in 2025. Chapter 6. Glasgow, the Yield King. For our final city, we're heading back to Scotland for the undisputed king of rental yields, Glasgow. If your primary goal as an investor is to maximise your monthly cash flow, then Glasgow has to be at the very top of your list. This city consistently posts some of the highest rental yields in the UK, and right now it's leading the pack with a massive average yield of 7.9%. That is an incredible return in today's market. The property prices here remain relatively affordable compared to other major UK cities, creating the perfect recipe for a high-yielding investment. The demand behind these incredible yields is robust and multifaceted. Glasgow is home to one of the largest student populations in the UK, with several major universities and colleges. This provides a deep and reliable well of tenants year after year. But it's not just about students. The city is a major economic hub for Scotland, with strong sectors in finance, engineering and media. Major infrastructure projects, like the ongoing development along the River Clyde, are further boosting the city's economy and its appeal as a place to live and work, ensuring that rental demand remains strong across different tenant types. To really capitalise on these yields, it's worth looking at specific high-demand areas. The city centre is obviously popular, particularly with young professionals who want to be in the heart of the action. But the West End, with its beautiful tenement buildings, bohemian vibe, and proximity to the University of Glasgow, is an eternal favourite for both students and professionals, and can command premium rents. Even areas slightly further out are seeing huge demand as the city expands. For any investor focused on building a portfolio that generates serious passive income, Glasgow's market in 2025 is simply too good to overlook. Outro. My final thoughts on 2025. So, there you have it, the top 6 UK regions for buy-to-let investment in 2025. As we've seen, the theme is crystal clear. The real opportunities for both growth and yield have shifted decisively to the northern cities and Scotland. Places like Manchester, Leeds and Birmingham offer incredible potential for capital appreciation, driven by massive regeneration and economic growth. Meanwhile, cities like Glasgow, Newcastle and Edinburgh are providing some of the best rental yields available anywhere in the country, making them fantastic for cash flow-focused investors. The days of assuming London is the only place to invest are well and truly over. However, and this is really important, investing in property is never just about picking a hot city. You have to be aware of the constantly changing landscape of regulations. Things like new energy efficiency requirements, potential changes to landlord taxes, and evolving rental laws can all have a significant impact on your bottom line. Staying informed and factoring these potential costs and legal obligations into your calculations from day one is absolutely crucial for running a successful and profitable property portfolio. Don't get caught out by a rule change you didn't see coming. Ultimately, this video is a guide to show you where the opportunities are, but it's just the starting point. Before you even think about making an offer, you need to do your own deep dive research into the specific local markets, streets, and even individual properties you're considering. Talk to local letting agents, speak with a mortgage advisor, and consult with an accountant. Making an informed decision is the single best way to protect your capital and maximize your returns. Thank you so much for watching. Don't forget to like and subscribe for more content, and I'll see you in the next video.